Santa rally. Can it happen, or is it going to be canceled by the Grinch? Today we'll break it down for you. Let's just jump right in. I want to thank our sponsor, and that is Uphold. This is a place where you guys can go out there and earn a little bit, but also get into the offer that they have, which is the card with the most XRP rewards available out there. 6% in XRP on everything you buy. I think it's for the first 3 months. The good thing about Uphold as a debit card is no credit checks required and up to 10% XRP back with direct deposit. That's when it's stacking on the other offers out there. Use anywhere Visa is accepted. Use our link down below to get started, and you too can get some XRP by just spending a little. Let's get into it today. I want to bring in Mr. Evan Aldo. As you guys know, Evan is a frequent here on the channel. How are you?
Doing great, Paul. Always great. I mean, the market's been a little bit boring, but maybe we'll continue the upward rally, hopefully. So yeah.
You're back in the States right now, right?
I'm back in the frigid Northeast, man. Ugh. It's cold.
Well, listen, if you guys aren't following Evan over on YouTube, make sure and check him out over there. Evan Aldo on YouTube. You can get all of his breakdowns. He does a course over there. He's got a lot of insights. We usually drop a link also, so check that out. Subscribe, tell him we sent you over to that. Let's get into a few topics today. One of the things I don't like is the continuation of bad news coming out of D.C., and of course, today is no different. We have now the Senate rejecting the dueling health care bills. Basically, what this means to everyone is it all but guarantees that Obamacare subsidies used by more than 20 million Americans is going to lapse at the end of the year. So that's the problem. This is basically just a tit for tat, I think, between the Republicans and the Democrats. It continues to put some pressure on the market. My concern is it causing the economy to start to falter a little bit. When you think about the economy and who's investing right now, what's your take on it? Do you feel like we are in a bullish phase, or is it just an accumulation down part of the market? Where would you position this, Evan?
I think we're in more of those typical mid-year cycles, call it what you want. I think it's going to be economically a bit weak for the next 4 to 6 months, probably not economically weak enough to really crash things, but I would estimate a 10 to 15% pullback for the S&P 500. And then you got, news like this, which probably would help out the Democrats more, which would make sense in the normal pattern. Usually the Democrats, the opposite party does pretty well in the midterm elections. So, it kind of looks typical of history. We'll see what happens with those subsidies. I haven't followed it too much, but maybe they'll come to an agreement or something. But I don't see there's a way where Republicans are keeping the House, with how things look right now.
Yeah, and that's a bit of a challenge overall. You also have another thing that's coming up here in January, which is possibly another government shutdown. This would be hideous. Even though it did drop a little bit over the last little bit since yesterday, it was at 41%. That has now dipped down to 34, 35% on Polymarket, holding right now in terms of a government shutdown. So maybe there is something brewing in D.C. that insiders understand and have reduced the possibility. How much do you think that will hurt the market? Because last time it happened, it did not help crypto.
Yeah, I think it probably in your typical bear market year, combined with most likely a Fed pause in January. Yeah, I would guess it would probably, coincide with more of your typical bear market. Probably would hurt the S&P 500, probably would hurt NASDAQ, probably would hurt Bitcoin and Ethereum. Unfortunately, however, if Bitcoin could go down to, some big targets, 50K, 60K, even somewhere in the 40Ks, that's rare opportunity generational buying areas that you can only get every so often. So, with blood comes opportunity.
We're going to talk about Bitcoin in a second. So you're telling me 40, 50, or 60K on
40 to 60 would be my range. Yeah.
All right, we got to talk about that. The other thing that happened this week, of course, is Federal Reserve began its recently announced purchase of U.S. Treasury bills, the first $40 billion. This is going to be done over the next 30 days. Powell confirmed this, calls it reserve management. This is pretty aggressive reserve management considering. And if you look at this, many analysts still believe this is soft QE, stealth QE, all that. It's still QE to a certain extent. But we aren't seeing the trigger QE, which is usually 100 billion plus in these cycles. Do you think that's what it's going to take before we see some risk asset movement right now?
If I had to guess, yes. I mean, the last time you ended QT, it took like what it was. It was around August of 2019, and then if you don't count pandemic, it still was about a 6 month, 5 6 month bear market. So if you're looking at that, it would probably bring us into May, which also coincides with I think when the odds are
Fed.
more likely that you would see another rate cut and the new Fed chair come in. So that's
Yeah.
that's the most obvious path, I would guess. So
Yeah, for sure. I want to go into some predictions. Then I want to get your predictions for 2026. Here's Tom Lee's predictions. Take a look.
Well, we're 3 years at 20% gains because the S&P probably closes 7,000 or so this year. And so I think there's a deceleration of what the market can do next year. But that 10%, I think, belies what will be a very turbulent year, similar to this year, where this year we had tariffs and sort of a Fed that became hawkish again. Next year is a year where we have a Supreme Court potentially overturning tariffs, and then a new Fed, which will be tested. So I think we could have what looks like a bear market in 2026, but we exit strong.
A cut into a strengthening economy, though. I mean, at the end of the day, that supersedes everything. Isn't that partly what the last couple of days, yesterday and today, are about?
Yeah, I mean, this was in my mind, even though people positioned it as a hawkish cut, it's actually quite bullish for stocks because the Fed, again, is now weighing the downside risk to the economy, which is the Fed put coming back into play. Plus, as you know, QT ended, and even though it's not officially QE, it's the absence of tightening, which is QE. But in our client conversations, people are more bearish now because tech is stalling. And it's in the backdrop of 75% of the weeks this year, sentiment on AAII has been negative. It is only something you see in the middle of a bear market. So I think people are sort of entrenched in their bearishness, even as we exit strong, and I think that carries into next year.
Man, I mean, I don't know who you're talking to. I feel like it's hard to find people who are bearish.
All right, so to his point, a little bit sideways. I'm just looking at the S&P right now. That would be a sideways chop zone if we went all the way into December of next year and only be at a 10%. So this could be one of these zones that we've seen before if you kind of compare what happened right here in 2021 where we had that zip zone, but of course that was influenced by something else. What is your anticipation of 2026? Give me one prediction, Evan. Come on.
10 to 15% correction in the first half, most likely. You know, those peaks that we saw at the end of 2024, I think you can retest them at some point, as you commonly do. 10 to 15% drop down. So think of a much less intense version of 2022, like maybe half as bad of that, I would guess.
Yeah. All right. Well, that would be critical for risk assets. This, of course, could push Bitcoin into a zone that many people are wondering what will happen when it goes into the no-fly zone, which is really below Saylor's sell point. That's the no-fly zone, guys. So let's go to the chart on Bitcoin, Evan. Tell me the track that you think Bitcoin takes in 2026.
So, yeah, the first thing let's look at right here on Bitcoin, you got your deep anchor wave that you confirmed on the 6th day, and it looks pretty similar with your money flow too, I should say. You know, your money flow going from green to red right here. Last time that happened was January of 22. Every bear market bottomed out quicker than the previous one, which is good for us. You don't have to wait as long. See, you had this drop down, and then you had a nice recovery upward. You're very choppy for a few months, and then, you know, you finally came downward. And I do think that, you know, you could do something like this. We're in a more lower trading volume time. You could be kind of choppy potentially until the next FOMC meeting, you know, at the end of January, maybe. And I do think you got a good shot of continuing forward, you know, let's say more short term, continuing forward, you know, maybe all the way up to 108, 109K. This is, if you can break above 108K, you know, get up to 115, 160, these areas, I would turn more bullish. And I don't mind getting back in at these areas in anticipation for super cycle 150K. But until then, I don't think that's the likelihood. I think the likelihood is more of something like this. You come back down, and then you finally get down to these points. So you have one technical target here. If we just do a very simple kind of technical target, kind of from these highs to these lows right here, if you break and lose that area, the technical target, you know, around 55, 60K, those areas. So that would be kind of, you know, unfortunately, I know people are probably going to get mad, I'm too bearish, but that would be kind of the high point, you know, getting down to kind of those areas. And then, it's always not as bad. So look at this, bear market, that was 76% down. I would guess something with a 6 in front of it would be your low in this next bear market. So that would be 48K. Maybe if things get really bad, down to like high 30s or something. I don't really see going under 40K. And I do think you got a shot at holding high 50s, holding 60K. So that would be my educated guess here. That would be my prediction. Somewhere like here. I think anything below 60K or anything at 60K is a pretty rare, good buying opportunity, because I'm in anticipation that you can get up to at least, 150K, 200K by the end of the decade. So that would be really good.
Okay, two things there. I'm going to go the flip side of that, a little bit more conservative on the 2026 prediction. I don't think Bitcoin breaches the 60K mark. I think that's the line in the sand for it, mainly because of the institutional introduction, what we'll see most likely happen on Wall Street, and also traditional investors, I think, will start coming in to the market because of Wall Street's positioning. And, I'll explain why I think that here in a minute. But when you look at, because you also mentioned there that you thought if we did get a super cycle run, you wouldn't go in on Bitcoin until 115, is that right?
Around there, yeah. I mean, if you could hold 110, let's say, or 108, that big area for, a couple weeks, 2 weeks, and then get up to 115, I think that would give the momentum to go up to 130, 150, new all-time highs. But until then, my case would be more likely that you would continue bearish and hit lower.
All right,
numbers.
so here we are. Let's go ahead and get your prediction for the end of the year. Santa rally or no Santa rally? It is December 12th. We're recording this. Santa rally for Christmas. Do I get a lump of coal or do I get Bitcoin back at 100K?
Well, let's go with Santa rally. 108K, Paul. 108K, Santa rally.
108K.
Santa rally.
All right, there you go.
Yeah.
I like it. Evan is bullish for the end of the year.
Yeah, but it may be
into the
delayed. Maybe
Christmas
give it till
spirit.
January. Yeah, give it till January. Chinese New Year. Chinese New Year.
Chinese. That's still a Santa rally. I'm going to take it.
Yeah.
We can put Santa Claus on the thumb for sure on that statement. Let's talk about ETH for a second. ETH spot ETFs now showing first signs of life after a little bit of outflows. Modest inflows starting to return. You can kind of see the chart there. I'll kind of zoom in on that for you guys. And maybe this is another little uptick on Ethereum. I still think ETH is the one to outperform here in terms of up against Bitcoin. How would you play Ethereum right now, Evan, when you look at the chart?
Yeah, so 100%. ETH should likely outperform Bitcoin because of monetary policy like it did in 2019. And now if you look at the chart here, Ethereum, very similar to Bitcoin in a lot of ways. The first thing I would really want to look at here is your weekly right here. And you see this nice anchor wave right here, very similar to this area. So you got your anchor wave back in, where was it? February of 22, right? That one. And you came up a little bit. Now here's the scary part, but not too bad. You came up a little bit here and then you came back down. So if we do that situation, we would reject from like 35 potentially, and then, reject from, as we did, we may come back down and make a higher low into the end of the year. So I guess that's your opposite of your Santa rally. It's hard to say. And then you'd come back up to 37, somewhere around there in January, probably by the next FOMC meeting. And then from there, you would unfortunately come down for a few months, down to 2K or something like that.
What are you
I would
talking,
remain,
Evan?
I would
What are you
remain
talking?
bullish. I would remain bullish as long as we can hold. As long as we can make a higher low here. And that
Higher
would be,
low.
the last thing I'll say quickly here, something with a 6 in front of it, I would guess, is what you would end up with Ethereum. It could outperform Bitcoin. I mean, maybe this will bottom out at 2K in May before Bitcoin bottoms out, like what happened in 2022. So just keep that in mind. That's possible too.
Okay, from what I'm hearing, though, and what you're showing me, is that Tom Lee's prediction of a $7,000 Ethereum in January is off the table. Is that right?
January of 2029 or what? I think his predictions add 2 years to his predictions, then you'd be 2 to 3 years.
Okay, all right. Well, there you go. Tom Lee has been dissed by Evan today. I got it. No 7,000. And of course, if you look at the poll today, we've got ETH has been outperforming Bitcoin for several weeks. Will Ethereum reach all-time highs before Bitcoin does? Let me ask you that. Would you agree with that poll? 56% says ETH all-time high before Bitcoin hits its all-time high.
That's probably a year or two away. Yeah, you got a good shot. I don't know. It's a good
Okay.
question, man. I don't know. Probably.
Well,
Got a good shot.
56% says yes, at least on that poll. All right, well, that's good. I mean, it's interesting that you're getting a little bit more bearish here, Evan, going into 2026. With all this news, I mean, we're going to possibly see QE. You might see a market structure bill. It's possible we could see all sorts of economic recovery riding the ship, especially around jobs, which is the thing I'm worried about mostly. The concern I have is still going to be sticking around Q1 and Q2 if jobs continue to be very slow, and then the injection of what we're seeing in terms of AI job pressure, which is real. It's happening out there right now. But there are some light spots out there. I was listening to a couple of job analysts that says, hey, there's a few spots within certain sectors that are starting to grow. That might be an indicator that we could be coming out of this. The S&P, though, here it is again, officially posting its high close in history. This is ridiculous. Plus 42% since the April 2025 bottom right there. Man, if you're playing the S&P, you look like a hero to your investors right now. This is crazy. Where do you think this goes?
There was one of the, yeah, no, I mean, S&P 500, I think we're getting towards the top. Let me show you the chart on S&P 500.
Okay, let's take a look.
Let me get that up. So, yeah, I mean, overall, I mean, you could come up a little bit more. I do think you may. I mean, my long-term prospectus for this really, long-term prospectus is you'll top out sometime before the end of this decade, but more of the less crazy long-term prospectus, you will see some type of drop down at some point in 2026, I believe. And when you look at some of these higher time frames, I mean, you got bear divs kind of forming. This looks like a little bit more continuation, but when you really, your 3 week, that's a bear div. I mean, it does look very overheated here. And then once your monthly gives you that bear div, you probably will see some type of pullback there. And I think the big line in the sand is around 600. And that would be your 13% correction, that you're in that kind of big area. See these two peaks? Price always loves to go back to these like previous peaks right here. That's like a big thing that you see for every asset in general. So I would guess something like this, into the first half of 2026, potentially into, let's say, summer or October, the latest, or something like that. But this would be a really good zone around 600, that kind of pullback. So I think you need to have a pullback. That's what I will say here. I think you need to have kind of a pullback.
If we see a pullback there on the S&P, and you're looking, I'm just wondering, are gold and silver starting to manifest what could be happening here? Because you've got gold spiking, I think. Did it hit it? No, not quite. It didn't hit it quite. It was 43.55 today on the trading day. It's holding at 43 right now as we record. Silver up, and then, of course, it reversed back down after it spiked to another all-time high at 64, coming back down here to where it's trading right now, about $60 on the low, spiking down, wicking down at right now holding a 61.92. Let me ask you, Evan, what are you, because I feel like you're in a bear market position right now. Am I correct?
Yeah, well, I mean, the most of my money is in, I'm investing like a 95-year-old right now. I mean, I have some money in gold, S&P 500, and Berkshire Hathaway, hence the 95-year-old part, because it's interesting. I was trying to find something that outperformed Bitcoin, S&P 500, NASDAQ, and gold in 2014, 2018, 2022, bear market years. The only thing I could possibly find was Berkshire Hathaway. So I'm like,
I got to get this right. This is a crypto show. You know that, right?
Well, they have some exposure to Bitcoin. I think it's one of those companies.
I'm messing with you. Listen, do you have any crypto right now? Are you in any trades? Yeah. Okay, so are you trading?
So
is that what you're doing? Is trading right now?
Yeah, no, I have ETH. I have some ETH. I mean, I sold a lot of the long-term positions, but I do keep, in case of a super cycle or whatnot. I do. ETH is my biggest position right now. Okay. I do have trades in. I'm hedging the bets a bit. It's more like intraday trading, swing trading right now.
So would you enter silver at $61? Let me.
Probably not.
Okay. So you've
probably
been
not.
Of course, if you guys have been following our channel, I mean, we started talking about silver back around $40 when we said this thing's getting ready to go. It started taking off. Andy Schectman, we had him on the show. He was, of course, spouting that there was a silver squeeze on, and sure enough, it has happened. Now at 61, I think, back here from August of this year. Let's see what the growth has been on just silver from August to where we're trading right now, 60% up. That looks like a meme
Yep.
coin. That's crazy.
Silver can be volatile. Yeah.
Yeah.
I think that gold and silver, I think we're kind of like in the mid to late 1960s for gold and silver. And I think,
Whoa.
they're doing well, but they're not really outperforming the S&P 500 by a crazy amount, at least not just yet. So I think they'll be kind of sideways, maybe a little bit bullish against the S&P 500 for the next few years. And I think once you get your next market crash, you'll see typically what gold and silver, they crash with the market, but they recover faster, and usually they don't crash as badly. So I think you'll see that similar to your 1970s, similar to 2000, 2010. Then I think you'll see that nice gold and silver run against the S&P 500. As of right now, what I think will happen, I think they will come down with the S&P 500 and then kind of stay sideways against it for the next few years. I think you need an actual recession to really, kind of make them outperform the S&P 500 by a lot. I mean, I don't think it's a terrible idea to buy gold and silver right now, but you'll very likely be in the red at some point in 2026.
Yeah.
It's maybe a DCA or something.
Yeah, well, and the key there again is the positions that could be moving right now. It's getting very dicey as to where you could bet, because you're looking at Solana right now sideways, and we're in the middle of breakpoint. How would you trade Solana right now? I mean, this thing is holding at 130 and has been for about the last 3 weeks.
Well, yeah, I mean, it does look, I mean, there's more of the short term. I think it will, as long as you kind of hold these areas, as you can see right here, I think you will see a jump up to like the 160s, which is probably, 20% upward, maybe up to 188. And then I think you'll kind of see your kind of start of your, drop down in 2026, unfortunately, unless you could kind of hold that 186, that's kind of like 110 or 115 for Bitcoin. If you can kind of hold those areas, then you could continue and potentially make new all-time highs. But I think that's the big area you want to get above. So my kind of base case here is that you're going to come back up and then you're going to drop down and see maybe 100, maybe down to 80, some of these areas. So that's just objectively what I would be looking at here.
That's your best case?
Probably, well, let's see. I mean, 70% down. That would probably be worst case. I don't know if I'd want to buy Solana if it goes down more than 70% from that all-time high, because then that's really bleeding badly against Ethereum and Bitcoin at those points, probably.
Okay.
So I would say somewhere between 100 to 80 would be like kind of the zone I would be looking at. And I don't see why you can't hold 80. You should easily be able to do so. I mean, Solana does look a little bit like right now the altcoin, or the thing in general I want to buy is Ethereum, because Solana keeps bleeding against Ethereum here. I would want to see more of a jump against ETH here to have more confidence in Solana right now. Like, my fear is that you're going to break down a bit more against Ethereum, maybe
What's your buy
70%.
spot on ETH right now?
Buy spot on ETH, I don't really look at like actual numbers, but I would hope to get in at like 2000, low 2000s, those areas. And if you look at the last time the Fed ended QT right here, I'm not going to count your pandemic, but look at kind of this area. If we map this out and marked it right there, let's see if we can look at this. This would be a good kind of trajectory for this. I would kind of estimate here. This would be right around 1700, 800, April or May. So kind of those areas. And I think that's a really good deal. If you can get up to, 11K, maybe even higher by the end of the decade, a lot of money to be made there, I think.
Yeah. Okay. Well, that's a 3 to 4 year cycle that we're talking about right now in terms of expectation. Let's pick an altcoin because there are a handful of these that are in accumulation phase at low valuation. Which ones would you look at right now if you kind of compare? One of the things that some of the large language models have been analyzing right now is they picked 4 tokens. This is across a bunch of different large language models. There were 4 tokens they selected that were buys for the end of the year. XRP was in there, Solana was in there, Ethereum, and Chainlink. Outside of that group, is there any else that you would say maybe there's an opportunity here?
Right now I'd probably just trust the AI. Chainlink especially does look, pretty attractive to me. Anything outside of those, I'm struggling. I mean, maybe you can mess with Zcash because that's getting a little recovery rally, but I don't know if I would be too hopeful on that. I think Chainlink, XRP are the two that I would be really looking at right now, especially Chainlink. And the reason why I like Chainlink right now, if you want to take a look at my chart real quick, is if we look at here, this is Chainlink versus Bitcoin. this did very well from 2018 all the way here against Bitcoin until August of 2020. So an interesting thing against Bitcoin here. You might be on the start of that same rally. Look at this trigger wave forming right here. Like, it wouldn't surprise me. This was the last time. Let's go to the last time the Fed ended QT. Right around here. It wouldn't surprise me if this does a good rally against Bitcoin in the next couple of years. So Chainlink, very hopeful on. I think it will come down with everything else over the next few months, but I am very hopeful on the macro for Chainlink, one of my favorite tokens.
All right, Evan, that sounds good, man. We're going to get this and more, because obviously we're going to be looking for special buys for 2026 coming up soon. We'll take a look at whether or not we can actually close out in a nice little rally here where some swing trades can start to take advantage. Last question to you. Am I shorting Bitcoin today, or am I going in on a long? I'm holding at 90K right now, 90,400 on Bitcoin.
This is one, from a trader perspective, I think this is one of the times you're going to hate this, but I have a long in and a short in at different levels. And if you can do 2-to-1 risk to reward ratio, regardless of how it breaks upward or downward, you will win the trade. So that's kind of what I'm looking at. If I had to guess, I would ignore kind of the bearishness, the noise for the next couple of weeks, maybe Santa rally, up to 108. If you don't see it by Christmas or by the end of the year, probably in January, you will see, some more extended bullishness.
Interesting. All right, man. Thanks for coming in today. We appreciate it.
Yeah, it was great to be on. So it's a pleasure.
You bet. All right, you guys know what to do. Make sure and get into our own private group, which is the Bear Market Edge. You guys can do that by hitting the link down below. Join that, absolutely free. And of course, follow me out there on X at Paul Barron. We'll catch you next time right here on The Paul Barron Show.